Hello.
Recording in progress.
Recording in progress for posterity. And then every time we do one of these, you should be, well, maybe not all of them. No, Allie, go away. Oh my God. Like clockwork. Second, you're like the most jealous cat person there is.
Kelly was born in Switzerland.
God. It never ends. Yeah, you should be recording stuff every time. I mean, obviously you don't want to upload. Oh, hang on. Wait. I do that properly.
I'm trying to record as much as possible, but
Yeah.
It's like when Cindy mentioned yesterday that should use the account. Okay, and go on mute. Yeah, that's it. Okay. So I kind of was reflecting back on what am I missing in terms of people not able to understand what I have in mind. So I kind of went back to the charts and I realized that I think there's a very important aspect that I haven't really verbalized as much, and you kind of know it more than anyone else, obviously, but I don't think it's kind of explained by me, or I'm not done any justice to that topic per se. And
Right.
and luckily she was on the call. She was actually trading at the time, today or yesterday evening or yesterday night, and I was like, okay, this actually. So whether you know it or not, or whether anyone else knows it or not, I thought it's useful to repeat this bit. So I think what she was doing yesterday was fine. Just that, I mean, the starting point for every opportunity is from the 15-minute chart. So what is on the screen? What is this? Okay. So what I mean is, like for example, this is HG. Yeah. So let's say which chart do you want to see? Do you want as in which ticker do you want to see? And I'll probably use that for the explanation.
Whatever's good. Like, I mean, you have HT on. I don't care. Oh, Alexa off.
Okay, well, let's say gold. You traded gold today, so
yeah.
Okay, so let's say gold, and I've got a 15-minute chart at the bottom, and then obviously, the 3-minute chart.
Right.
And then obviously we need to change this to 15, and we should be good. Yeah. So so my day or the way I actually trade, I kind of look at the 15-minute chart as the first thing, and I kind of mentioned this term fleetingly, but it's like a beauty contest. So on my screen, I've got 4 different tickers with the 3 and the 15-minute splits. So I've got so what I would do is I would actually kind of browse through. So when I start looking at trading, I'm just literally browsing through each of those tickers, and I'm just asking myself which one looks the best.
Right.
Now that question is very vague, which one looks the best, but then the parameters for that question are really the key. So when I say the best, what parameters I'm actually looking at, right? So I'm actually looking for a couple of things. So for example, on gold, you can see here, and I'm trying to look at the pre-market, so I'm just going to highlight the pre-market and just keep it as is.
Right.
So and then obviously I want to trade somewhere after midnight. So for example, let's say from this time onwards, I'm looking at this chart, and or I'll probably zoom out slightly so it's better. But so the good thing here on gold is that the 15-minute wave is pretty thick. Okay.
Right.
And then obviously after 8 o'clock, the MACD was below both the waves. So that's a pretty bearish momentum. So that's a good thing, right? And then if I also then compare the 200 and the 40, so there's a fair bit of distance between the 200 and the 40. So that basically tells me that the moving averages are fairly, stacked up nicely, or there is there is a lot of space between the moving averages. So basically that's a good chart. They are not squeezed out. Basically,
Right.
that's what I mean when I say the distance between them. So there's no squeezing, which
Mhm.
is basically usually creates all of those ripples up and down.
Yeah.
So that's a good chart to trade. Now that is the kind of the beauty contest interpretation, if I may.
Mhm.
So I look for that opportunity, that chart, and the characteristic of that chart in that format. Now, so when should I start looking for an opportunity to trade? So there are two opportunities. Primarily, the way I'm looking at that, because so now we are looking at a double three, right? So that's my only trade. I'm not looking for singles at all. So when does a double three actually happen? Okay, so once the chart is established, when do I look for an opportunity? So the opportunity actually is kind of almost obvious. So for example, I said that I'm probably going to look at this chart after midnight. So here is midnight. Let's assume that this is when I start looking at this chart, and the beauty contest was done before midnight. So I would have qualified gold as an opportunity, as a good chart to look at. Now,
Right.
if I look at gold at midnight, it basically was a split chart in the sense that it was an unclean wave. So that's
Mhm.
actually a good thing for me, because that means that I can wait for the chart to become clean.
Right.
And that's when a double three will actually happen. Okay. So good chart, as in the one that is actually won the beauty contest or is one of the top three in the beauty contest, and then an unclean chart, unclean 15 is a good starting point. So the trade for me is going to be the double when the chart becomes clean.
Mm.
So that's the kind of the very obvious opportunity that's waiting for us,
Right.
or that's the very obvious opportunity that I'm going to take. So basically, my trades will usually be at the polar ends of that clean and unclean. So when the chart becomes unclean is an opportunity.
Mhm.
Even when the chart becomes clean is an opportunity,
Right.
because at both sides of these clean and uncleans lie the double three.
Yeah,
So the double three on the downside and the double three on the upside.
for sure.
And obviously, the double three on the downside will actually be the pullback. So for example, the trade that would have happened at 8 o'clock would have been the pullback.
Yeah.
And then the trade that happened at around 12:45, 12:49 is the continuation.
And then in terms of like, I mean, the one at 8 o'clock, that move
Mhm.
is, I mean, the
Yeah.
move is horrible. Just because
So,
it's
so
early in the
then,
night. And
yeah, but so then here is the thing. So if you have a pullback, okay, then you want to kind of scalp, right? You want to kind of do a quick scalp on a pullback because you don't know how long the pullback will last.
right.
So if you're trading like 5 points on what you did, right? I would actually be looking at a smaller target on that pullback, and then on the continuation, I might have a 3 point or a 4 point trade on that move up, because it's
Okay.
now going into the trend, and
Yeah.
I would want to take a longer trade. So that's the way I would actually split both those opportunities.
And it's
So,
funny you say that,
yeah.
because I was
Mhm.
looking when I did trade GC this morning, I was like, okay, so this is
Yeah.
just a temporary pullback. I shouldn't be aiming
Yeah.
for too much, but I'll just trail it
Yeah.
anyways, which is why I
Yeah.
only got the $4 or whatever.
Yeah. Yeah.
On so it was good. Like, I mean, I do understand the having a spread between the waves, and then that there has to be movement. I mean, that's what I did yesterday with
Yeah.
NQ. You called me out on it, and I mean, like, I
Yeah.
knew it.
Yeah.
But
Yeah.
it was just it was right away. I was like, oh, I'll just take this anyways.
Yeah.
But meanwhile, it was
Yeah. Yeah.
just like, yeah,
Exactly. But I mean, it's just a kind of a, in a sense, a process basically to say, okay, that it's a pullback. I would
right,
rather scalp, and as you put it, a better way to scalp it is to, kind of do a bit of trailing,
yeah,
take out some points early on, or take out some contracts early on, and then put some runners on to see how far the pullback goes. Because I mean, say there are two sides to the pullback, or actually three. uh, you know, the pullback can last a small time or a long time. We don't know that.
Right.
So then a pullback can result in uh, a continuation, because a pullback can result in a reversal completely. So there's no guarantee that a pullback has to have a continuation, right? A pullback can then last too long, and that trend can actually just fall apart.
Right.
And so that's the thing about the pullbacks. But as long as you can see the other end of the pullback, which is a continuation, then you want to basically put more emphasis on getting more points on that continuation, basically. And again, it depends on how the charts look like to you. So for example, when gold ran up, it basically went above the pre-market open level.
Yeah.
And again, if you zoom out of the gold chart, you will see that it was a fairly bullish chart after the breakout that has happened yesterday pre-market.
Yeah.
We had a big breakout, and then it was kind of consolidating, and then it gave a that continuation that I was pointing to was a pretty decent continuation after that kind of I wouldn't say exhaustion, but basically a bit of that rotation, basically. So that's what I was actually kind of telling Cindy, that the way to anticipate a trade is to know that at the end of so at both ends of this unclean 15 is a double three.
Right. And the double going back into the trend is the more powerful move.
Yeah, exactly. But then you determine that based on the structure of what's happened before that.
Right. You'll have your levels.
Exactly.
Yeah.
So that's what I told her, and I was like, I don't think I've ever verbalized this in this fashion, basically. To say, an unclean and a clean, are two ends of the double that we want to take. And the way I would want to approach it is that if it becomes unclean, I would rather scalp. And then when it becomes clean, I would look for slightly more profits, basically.
Right.
And before that, before I even choose to trade gold, the beauty contest that I'm doing is basically based on how the 40 and the 200 on the 15-minute chart are spread out, or for that matter, how spread out are the waves compared to each other, right?
That's something I need to look for often.
Yeah, like for example, I will tell you that. Okay, and this is so like for example, the 3-minute can be squeezed. Okay, like if you see the 3-minute on the gold chart is squeezed, even right now. That between the 3-minute and the 15-minute, if the 3-minute is squeezed but the 15-minute is not, then I will give more weightage to the 15. But if the 15 is squeezed, then I don't want to trade that chart.
Right.
So as an example now, so I'll show you yesterday on the 15. And so when is the 15 squeezed, right? The 15 is squeezed when the 40 and the 200 are together or very close by.
Yeah.
Okay, so now if I show you with an example, and that's when you want to be the most cautious. So this is crude, okay, and I will show you crude when it was squeezed. Can you see the squeeze somewhere on this chart? It was right here.
Yeah, I mean it's hugging the 200 and
the 40 just came down, hugged the 200 right there, and then boom.
Yeah.
Right.
There's the fake out.
Yeah, and then it does. I mean, if you zoom in, you'll actually. I mean, so it did fake me out yesterday a bit. It wasn't that bad because it was crude and not NQ.
Yeah.
But you can see how when both of those lines are merging along with the 8, obviously, it kind of goes up and down, up and down. But that also kind of tells you that there's an opportunity lurking around. Just the way we've kind of seen the squeeze happen, anyways.
Right.
The moment it squeezes, you know that it's going to break out somewhere, somewhere in a particular direction. We don't know, but yeah. So that was a squeeze. Whereas, if you now look at, if I tell you, say this was the day prior to the squeeze, you can
Oh,
see that
perfect.
it was far away, it was perfect, right? Exactly. Just like gold, right? The way the gold chart was looking.
That's like the
great.
easiest trade in the world when
Exactly.
everything's,
So, but then again, if you look at both ends of that unclean and then clean, both sides of this is a 3-minute double. So if I now go to that 3-minute double, and there we go. Here we are. Boom. That's the first 3-minute double down, right? Right there. And then you want to wait for the clean. And then this is the anticipation. You just wait for that, that correct alignment on the 3-minute, and off you go.
Right.
So that for me, and again, the question would have been, okay, when it's getting unclean, you want to scalp. But then I said that, we really don't know how long this pullback will last, but you would rather scalp and get out, and then basically put more weight on when it becomes clean, and go longer on that opportunity. So like if you now look at the 15-minute chart, it went down, but then when it went up much higher. So that's what I was basically, so that's what I think about in my mind when I look at these charts. And when I put up, and I was saying, so because you have limited screen space, so you want to basically utilize that real estate judiciously. Now, so which is why you want to flip through the charts when you're starting to trade and say, okay, what's the beauty contest? Who's going to win the top 4 prizes of the beauty contest? So the top 4 beauties will actually have the real estate on your screen, and the rest will not.
Okay.
So that's how I kind of go about identifying which ones to trade, and then literally wait for the unclean or the clean scenarios, depending on where they are.
So, and then just prior to, I mean, when are you doing your levels? Like, I mean, I know I do my levels every day, but when are you looking, like, are you just setting it up and going, oh, you know what, here was the Globex Open, here's like, gotta watch that, mark that.
Yeah.
Like,
so
I mean, how far back are you going, I guess is what I'm saying. Like, I mean, obviously there's big levels and stuff in 20,
Not much. I mean, so I usually kind of I would usually want to stick with the colored lines, because they are the first kind of way. But say, for example, if I'll show you silver today, I was very bullish on silver today, but only after I had, so I was bullish on, not when I say bullish, I was very keen on trading silver, and I was very keen on trading NQ today, okay, because of a couple of things. So for example, silver here, okay, right, come on, silver, load up, all right. I don't know why it's showing crude here whilst the indicator. Okay, we are getting it slowly.
It's always on Zoom. It always just
I don't
lags so hard.
Okay. So here we are. So this is silver. So so why was I very keen on silver, trading silver today? So if you see, silver was in a solid consolidation since yesterday, 10 o'clock.
So the breakout was there.
The breakout was imminent. The breakout was, given, so, and then again, given the way the 15-minute was, the breakout had to happen on the long side, is what the highest probability was.
Right.
And I had marked out, the bottom and, some of those key areas. So like, okay, so if we, if I was to scalp on the long side, I may want to just, look at that pink line-ish right there. And then if it had to go further, it had to kind of go up. So I had actually drawn another line on, kind of as a next level opportunity. Okay.
Right.
So that was what I had actually drawn out. But what I told Cindy was that, because it's in such a consolidation mode, the best chance of silver moving will be when a lot more traders actually join the bandwagon. And a lot more traders will only join probably after the European Open or the European pre-market. So, after 1 o'clock is when I would want to look at silver. although it was, although you had, there were this, unclean to clean moves
Right.
at 7:30 or 8:30, all of that. I was like, I'm not interested in that right now. I'm only going to be interested later in the day, which is the European Open.
Right.
So luckily I caught it in the right, I actually caught this correctly. The only thing was that I entered slightly early. So if you see my markup on that, on silver, I was actually early. Okay.
Right.
But I was like, okay, I knew that I was early, but I wanted to basically take the entry at the 200. So although entered at the 200 had a little bit of heat, but then when it moved nicely.
Right.
So that was what. So one is the levels, frankly, and the other is basically, in this case, it was also the time. I knew that because it is such a big consolidation, it
Yeah.
will need a lot of buyers. It will need a
Yeah.
lot of good buyers to kind of push it.
It's
It won't just
London
happen.
Open. Yeah.
Yeah, exactly. So, and that's what. So I waited for it, and when I saw, when the first, at around 1 o'clock, when the first move did not fully materialize, I was like, okay, this is good. Now I'm going to wait for the London Open, and then as it happened, I was again, as you can imagine, I was a bit too eager because I've been waiting for a long time. So
And I think
I
that's
entered.
the number one enemy is just patience.
Yeah,
I mean,
correct.
it's funny. I can enter the trades when they're set up. Like I'm fine, but the
Yeah,
problem is staying in them. I'm like, oh, it's too long, and
yeah,
I'm not used to it. Even though I'm positive, it's
yeah,
just I'm not used to being in the trade for like minutes.
yeah.
So yeah.
And the same. So basically levels. So I draw my levels based on just the previous day. I don't really.
Right. Okay.
So to that question, yeah. So I
Yeah.
would look at levels, but they wouldn't be really big levels.
And that's what I've been
Except for
doing.
NQ, and I'll probably show you what NQ. And this is basically, this also was classic because so this was the first trade that both Cindy and I actually took, and this was exactly when I'd finished. So so for example, you can see this box here.
Yeah.
That was already marked up. So before we even got into the trade, I was like, okay, I want to take this box as a trade
Right.
because again, why? Because if you see, and I had just finished discussing this with Cindy,
Yeah.
literally that okay, I would want to wait for the unclean, but I
Yeah.
don't want to go to the unclean because I want to actually take the continuation here.
Yeah.
And then once the continuation actually happens, then my plan is to enter on the 200 obviously, and then take the first colored line as my out.
Right.
Okay, but I expect copper to make a new high. So what I was actually telling her was that this is the previous day's high. Okay, and the red line obviously is the news line. So
Yeah.
I would expect copper to at least go to that place. But because I had two contracts loaded up, I was like, and that was my first trade of the day. I was
Yeah.
like, okay, I'm happy to take it. I mean, there were like 400 points. Sorry, $450 basically around that.
Yeah.
I was like, okay, I'm going to take that, but I know that it will go more. How long does it take? I don't know, but the very likely, if we get a nice double here, then the opportunity is that much.
Right.
But I'll be happy to take just that small first big bite on that. So, so again, when you say again levels, there are most times it's actually the colored lines, Dave.
Right. Right.
So I don't even draw the levels as such. Now, I said that I was excited about NQ today because of one very specific reason. And again, NQ was different because I actually have made a video and I've put it on YouTube. It's actually called passing evals and the analysis of the indices. I've
Right.
actually done that.
Yeah, I watched
Okay,
it. I've watched all
yeah.
your videos. But yeah.
Yeah, so in that video, what I'd actually marked out were 3 levels. Okay, and they were basically these 3 lines that you see. So this 1, 2, and 3 levels right there.
Yeah.
Those levels are actually based on the FOMC meeting. Okay, so the top was basically the highest candle of the
Right.
FOMC announcement that happened a couple of
News,
weeks
yeah.
back.
Yeah.
Yeah, the middle line was basically the low of that news, and the third line was the low that happened a day after the news. So the price has just kept on pinging between these levels. Okay?
Right.
And, yesterday, we climbed up quite a bit, and then sorry, the day before yesterday,
Hmm.
it climbed up quite a bit, and then we couldn't really go to that top line, which is the high of the FOMC day,
Right.
right? So we couldn't do that, and we failed. Sorry.
Yeah, no, I just want to give you a heads up. I do have to run soon, so I just yeah.
Okay. So we couldn't go there, and then yesterday, what happened was we hit that candle,
Right.
the closing candle of FOMC.
Yeah.
Okay. So why is this? Okay. Okay. Yeah. So it hit that line again.
Yeah.
Okay. And then through the pre-market, it was going up. So I was telling Cindy that my trade is when it goes up,
And it comes
does a
down.
double, and then comes down, because I know that once it does a double and comes down, it will hit that same line as my
Right.
target.
Yeah.
Right. And so that's what
Makes
it's done
sense.
today. Yeah. And so which is why I was actually bullish on taking the NQ trade, but anyways, it didn't happen. But you'll see that, I was everything else. So it tried to do the double many times, it couldn't, and then finally it did, right? And then when it did, that was the time for me to get ready for the trade. But then I was already done with silver and copper.
Copper,
But
yeah.
but that fall literally goes back, sits there, and now it's falling
Bounces
harder.
off, yeah. Now it's going.
Yeah, but that's why I was actually kind of, okay, today I would want to look at NQ and exactly the setup basically. So yeah,
Right.
that,
Love it. Thanks for this. I'll cherish it forever.
yeah. So actually, if you would want to pass that file, this the recording file,
Right.
I'll upload it on YouTube and put it up as a video anyways, because I think I've explained what all the trades that I think were useful and the setup and everything
Yeah.
else. So
I will send it off to you.
Cool.
All right, so here.
Yeah, so that's it.
All right.
But yeah, I thought that this 15-minute interpretation, the way I kind of visualize it, was useful.
Yeah. The fox and the
But,
cow have spoken. More so the fox, but that's okay.
right.
The cow appreciates the fox. Anyways, thanks again, bro, and I'll catch up with you later on.
All right. Cool.
All right.
You take care.
Cheers. You too. See ya.
Bye.